Hey guys, welcome back. If this is your first time here, my name's Zoe and this is Found Finances. Today we're going to be talking about credit cards and whether or not it's in your best interest to get one or not. And also just going over kind of the basics of how a credit card is different from a debit card and just how generally it works, because I know a lot of the times one of the first stumbling blocks to getting it is you don't really know what it is or how it's different from other things. I feel like we've all constantly heard about credit cards and hear either our guardians or our parents or friends of sorts talking about credit cards and using them. Some of you guys may have heard of credit card debt, something that I'll be touching on in this video, but that's super dangerous and also really, really challenging to get out of once you're in it. So one of the best things to do is to avoid ever getting in it in the first place. Maybe you have a debit card right now and you're looking to see, well, what would be the benefit to me to getting a credit card when I've already got the system with the debit card pretty much down and I get it, it's really straightforward. Why would I want to go changing that? I'll get to that as well in this video. And I'll kind of be breaking this video down into pros and cons about credit cards. I just thought that would be the best way to manage my thoughts and advice about credit cards in like a digestible way for you guys. All right, I think that's enough of an intro. Let's get into it. So the biggest real difference between using a debit card to pay for something and a credit card to pay for something is that a credit card lets you spend money before you technically have to pay for it, or technically before you have that money to spend if that's your circumstance. So when you first apply and get a credit card, what you're going to be given with this card is called a line of credit, which sounds pretty abstract, but it basically means you have a limit on how much you can spend on that card per month. So your line of credit is basically an amount of money that they're willing to let you spend on this card per month before you have to pay them back when the monthly bill comes at the end of the month. That limit on how much you're allowed to spend on that card varies a ton just based on a bunch of different factors that banks take into account when they're looking at your application and either approving you for their credit card or declining your application. They're mainly looking at how risky you are. So can they depend on you to actually pay them back that money that they said they're, giving you for that month? So reliability, trust, evidence that you've been able to pay back things in the past. So that'll be your credit score. A lot of the time they'll look at those kinds of things when determining what your initial line of credit will be. And then once you have that line of credit and you have your credit card and you're spending it, month to month, and each month you're paying off your balance in full, odds are that credit limit is going to go up. So say that when you first got your credit card, they said you can spend up to $1,200 a month on this card. After that, you're cut off. Or if you exceed your credit limit per month, there are fees usually associated with that, and I'll kind of touch on that in a bit. But once you prove to them that you're reliable and trustworthy in the fact that you will be paying off these monthly balances, that credit limit will go up to maybe $1,500 or $1,800. And so with a credit card, you don't actually have to pay what you've spent on that card until the bill comes from the credit card company. I think a kind of good way to think about a credit card is that it's like the card is paying for whatever you're buying in the moment. So say you're at Starbucks and you use your credit card, the card is buying that Starbucks drink for you, and then at the end of the month, that card's going to send you a note in the mail saying, hey, you owe me this much. I bought this Starbucks, I bought these pairs of shoes, I bought this dinner. This is how much you spent, and it's time for you to pay up. That's kind of how the premise of a credit card works, if that makes sense. So you don't literally have to pay that money until the bill comes for you. So that means that with credit cards, you can hypothetically spend money that you don't already have. Say that your paychecks come every 2 weeks and it's not one of those weeks that the paycheck is coming and you really want to spend $300 on some really great concert tickets and you don't have $300 in your checking account or your savings account or wherever you keep your actual money. You could use your credit card in that instance, right, to pay that $300 so you could buy those tickets for $300, put it on your credit card, and then know, hey, next week I'm going to get my paycheck, so I'll actually have that $300 to pay for those tickets then. I just don't have it now, and if I wait that long, then I won't be able to get the seats I like, things like that. That's something that credit cards allow you to do, is that you don't hypothetically have to have the money in the moment. This leads me directly into my first con about credit cards, which I mentioned previously is credit card debt. That credit cards are an incredibly slippery slope if you're not someone who is really well managed, responsible, isn't impulsive, and just wants to spend money and doesn't actually have an understanding of how much money they actually have, what their income is, what they're able to afford. You have to be so careful in these situations to know that you actually have that money to be spending, because if you don't, and you don't pay off your balances in full, which I'll get to in a bit, but interest will start accruing on those balances, and that interest is insane. And on top of that, if you miss payments, you're going to start getting fined by the credit card company, and you're just going to start digging yourself into a credit card debt hole that is so difficult to get out of. So I really encourage, when thinking about credit cards, to really take this into consideration, that you know in yourself that you're not going to be spending above your means, because credit cards allow you kind of to temporarily do that, which can work out fine and be great for you. You want to make sure you actually do have that money. Otherwise, they're going to come after you, pretty much. But another pro is that if you do pay off your balance in full every month, there really should be no interest accrued on any of your credit cards. So it should just be a card that you get to use and you pay off and works in this system, but you're not getting fined or billed for anything because you're using this card over your debit card or cash. So the con of not paying off your balance in full every month, if you just start paying your minimum payments, like I mentioned, interest will start accruing, which will make it even harder for you to pay off that initial balance that you couldn't even pay off at the end of the month anyways. You know, the only reason you're not going to pay off your bill at the end of the month is because you don't have the money. At least that's one of the main reasons people do that. I don't, maybe there are other reasons people would choose not to pay off their bill even though they had the money at their disposal, but I don't really understand why you would, because interest would start accruing. And just to give a little context about the interest rates that are usually on average linked with credit cards. So I've made a couple of videos about student loans, and a federal student loan has interest on it, so you have to pay more than what your loan initially was, right? That's how interest works. Their interest rate for a federal student loan is around 4.5%, and when I say there, I mean the Department of Education, but 4.5% roughly, which, you know, isn't terrible, it's also not great. But for a credit card, it's usually on average between 15 and 19% interest. That's a huge interest rate. That's ridiculous. Like, you don't want to get caught up in that, is pretty much what I'm saying. That is a really dangerous, slippery slope once you start there. Another con is that late payments, so say that you pay off your balance in full, but you're late by 3 weeks. Late payments are going to affect your credit rating or your credit score, which is a crucial thing for if you want to buy a car or you want to rent a place or any kind of big ticket adulty thing you want to do. Usually people are going to be looking at your credit score to, again, give them that kind of idea of, can I trust them? Are they a reliable person that will pay back their money the way that they say they are? Late payments also are usually associated with late payment fees, which kind of brings me into my next con, which is that a lot of credit cards have hidden fees. So some of them have annual fees that you need to pay if you are just using their credit card, that once a year they're going to charge you a set amount because you're using it. I would really stray away from anything that's going to say they're going to charge you any money, because you shouldn't have to pay money to spend money. Late fees, like I said, and all of these fees are going to be on top of the interest you're already accruing if you're not paying off your balances in full. Okay, but another pro to credit cards is these freebies, or these rewards programs that come with a lot of credit cards. Also, a thing that I'm kind of learning right now too is that it's not just banks that can give you credit cards, right? Like my credit card is through Bank of America, which has like also my savings and my checking account. So I just thought it'd be easier to have everything in one place. But like Victoria's Secret has a credit card, like Walmart has a credit card, REI has a credit card. So the benefit to having a credit card that's with kind of one of these private companies, or like Southwest or an airline of sorts, are the rewards that are associated with them. So say that you shop at REI constantly, you're a huge outdoors person and you need all this equipment and you're constantly spending money. Well, the reason that you'd want to take out an REI credit card is that they'd be loaning you that line of credit. So you're right, you'd be paying them back at the end of the month, but you would start most likely accruing rewards through them, which, you know, you're going to start saving other money that they're going to be like, at the end of the year, you have $700 in credit that you can use on products because you've been spending money in other places, but using that REI credit card, if that makes sense. A ton of people use like United, Southwest, just any airline credit cards, because whenever they purchase anything, whether it's at the grocery store or getting gas, all of those, or every dollar spent usually is equated to like a point or so. It's like, sometimes it's like 1 to 1, $1, 1 point. And if you accrue a set amount of points, that can get you a ticket somewhere, right? So that's like one of the biggest pros personally to me about credit cards, is these like rewards that are out there. And I really want to get more savvy about figuring out what the best deal is for me and like what's the best use of my time and what credit card I want. Like, I'm not someone who spends a lot of money shopping in general. I don't have a huge part of my budget allotted to that. So I don't have like a store that I'm like, yeah, I'll be spending money there all the time, so I should get their credit card. But like airline things sound really interesting to me right now. And then the last pro I wanted to touch on is that it's usually safer than cash, a credit card. And that's pretty much the same for a debit card, I would say, because, you know, say your wallet gets stolen and you had $700 in cash in your wallet, well, that kind of sucks, right? But say that you had your credit card in your wallet, also sucks that you got your wallet stolen in general, but you can easily immediately call up your credit card company like in an instant and get it canceled. So the moment you find out you've been robbed, you can cancel that and nobody's going to start jacking up your credit card bill or costing you money otherwise. So that's just kind of a tip in general, that it's usually safer to carry credit cards or debit cards or things like that instead of cash. So that's a pro too. But yeah, those are kind of the things I thought would be the best to consider when thinking about getting a credit card. Whether or not you should get a credit card is like really thinking about how responsible you are with your money and if you can trust yourself to be reliable and make those payments on time. Because if you can't, the system really isn't for you. It can cause so much more strife, anxiety, and stress in your life than positives if you can't make sure that you are someone who can pay those bills on time. So yeah, those are my tips if you're considering getting a credit card or thinking about just understanding what a credit card is and how it works better. I want to keep this dialogue open about credit cards. It can be a really convoluted and complicated process, or at least seem to be. So if you have questions or concerns about the process in general, or just have questions about what I was talking about today in this video, please feel free to hit me up either on Instagram at Found Finances or down in the comments below. Either way works. Of course, don't forget to subscribe if you're enjoying these videos and give this a thumbs up if you took something away from it. I'm excited to keep talking about this and other topics, all things money. So stick around for more. See you guys.